Hi, welcome to another edition of the Reyker Financial Product videos. Today I have the pleasure of a small panel to talk about our latest product launch, an interesting plan we call the mining sector kick-out plan. It's a kick-out plan with difference. Therefore, I have two colleagues with me today. One is Laura, she works in the client servicing team, and we've got David with me as well. David works as an analyst in the front office, and I think, Laura, he got quite interesting views on the mining share sector.
Yeah, so David, this plan is linked to the mining sector and 3 shares specifically within the mining sector. I was hoping that you could tell James and I a little bit about your perspective on how the sector and these shares have performed.
Sure. I mean, for me, the mining sector in its very nature is quite cyclical. The industry as a whole should benefit from the global economic recovery that currently is in place. We're also seeing that the economy is somewhat supported by loose monetary policy, which again should benefit a cyclical industry such as the mining.
And the 3 shares, which 3 shares we got, David?
The 3 shares that this plan relates to is Rio Tinto, Anglo America, and Glencore Strata.
And the performance so far this year?
The performance of the 3 stocks themselves is actually underperformed the wider market. So the FTSE 100 is up about 14% year to date, and over the same period I think the 3 stocks are actually marginally down.
But probably that represents also opportunity to invest, right? After this correction.
Well, absolutely. I mean, the market at the moment as a whole is actually looking quite toppy, if I'm being honest. The mining sector, obviously lagging behind year to date, actually represents somewhat value at the present.
Interesting.
Okay, so quite a positive outlook for the sector and the shares. However, I'd like to hear your perspective on how the slowdown in China would impact the performance of these shares and consequently the investment in this plan.
Sure, absolutely. I mean, there's no question about it that the slowdown in China, all the rumblings about the hard landing in China as well, that's acted as somewhat of a headwind for mining stocks in particular. Nonetheless, China actually continue their urbanisation at a rapid pace. I mean, economic growth, GDP, is looking at about 7.5% per annum this year.
Yeah.
And as I say, that continues to be the trend we're seeing.
Yeah, interesting you mentioned this because you mentioned urbanization. I think regions like Africa and some other emerging market is also urbanizing rapidly. I mean, China, the main cities are all based on the coastal area, but there are remote areas that need modernization. They need equipment, they need construction, they need infrastructure, similarly to many African countries. And they need raw materials. And where did you get the raw materials from? The mining companies.
Absolutely, and I think this only kind of adds colour as they progress on in urbanisation, not just in China, but like you said, in Africa, Asia. As I say, the demand for these raw materials, commodities, we can only see increasing.
Interesting.
Okay, so if I share the perspective with you both and have quite a bullish view of these shares and their performance going forward, James, let me ask you, why would I not invest directly in these shares and invest in the product?
Interestingly, the answer is probably yes. I mean, if you're very bullish, yes, buy the shares. But we always ask this question, is that what if you're wrong? I mean, people want to invest and sleep at night. And what we want to do is create a structured investment products linked to these sectors, as David said, have opportunities there, but we want to create a strategy that basically allows a kick out even if the market falls a bit. And also there's a protection barrier that was monitored only at maturity. If none of the shares have dropped more than 50%, you get your money back.
Yeah, and absolutely throughout the product, the actual defensive nature of the product in terms of its kick-up level declines as the product goes on.
Yep.
So as I say, it can be used as a hedging tool for people that perhaps made money in the mining sector or these particular stocks, but perhaps want to move over to something a little bit more defensive going forward.
Exactly.
Okay, wonderful. We've had a really good discussion about how we think the market's going to perform, how it has performed in relation to this sector and those stocks. And just want to highlight a great feature in this plan and ask James a little bit more about it, and it's the plan monitoring service we have when you invest in this plan. Can you tell me a little bit more about what this entails?
Yeah, in reality, what we think as from Reyker's perspective is that structured products, a lot of people use it as a fixed term investment. Invest and leave it until a kick out or maturity. It's an investment, so it needs to be monitored and there's opportunities that you may want to exit because it's make enough gains, or to avoid losing too much money, you want to reconsider, switch out from the product, rebalance the portfolio, reinvest in another investment. Now for this particular structured product, because it's linked to a sector and free shares in that sectors, is quite targeted, and is that investors, as you already pointed out, need to have a particular view on the market. Now we offer this because if the view turns out to be correct and make money earlier, or turn out to be incorrect and they start to get locked in and no kick out occurring, we offer this plan monitoring service such that investors and their advisors can reconsider whether they should switch the investment from this investment plan to other products. This is important, and you will hear more from us about this product monitoring service in coming months.
Okay, great. Well, thank you both for joining me. It was a great discussion.
Thank
And all of our brochures are on our website, and please do get in contact if you have any queries or comments. Thank you for listening.
Thank you.